righty, Tuesday, June 15th, 2021. We are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these markets one step at a time, looking at the indexes, commodities, currencies, Bitcoin, individual companies, having some fun looking at different chart setups, trading ideas, and hopefully give you guys some insight and some value into your daily routine out there. And welcome back to our community, hashtag Team Tackle. It's our official hashtag because that's what Tackle Trading, quite frankly, represents, is a community of traders and a team here. Let's get that conversation started in the way that you guys always do. And I'll kind of pop in there in just a minute and engage with you guys, look for any questions that you got. By the way, if you're brand new to the channel, we've had a lot of new subscribers here recently. Maddie, we got to start thinking about what we're going to do when we hit that 20K mark because we had a big special event last year on 10K, and we're inching up towards there, over 18,000 subscribers right now. If you are new, click that subscribe button, click the bell, and come back and join us each and every day. Before we get too far into market analysis, though, I do want to talk about some things that we just released here at Tackle Trading in the last 24 hours. Put a podcast out there yesterday, tradingjustice.com. It's a podcast we've been putting together for 7 years now. If you're a listener, we love you and you know who you are. If you're not, make sure you are subscribing to the podcast on any podcast apps. And this one, Matt, actually came in a twofer because it was an announcement of also something we're doing at Tackle Trading called the Trading Labs. Give us a quick little bit of information about the podcast. I'll drop the link, and then we're going to chat Trading Labs for just a second as well.
Yeah, if you haven't had a chance yet to download the latest edition of the Trading Justice podcast, it is out there for your listening pleasure. And in the Trading Labs, we brought in Coach Mark, Emily, and Tyler from Tackle Trading to talk about the community, a little bit of Tackle Trading, but really to discuss Trading Labs and what they are. We are releasing Trading Labs starting next week at Tackle Trading. It will be a subscription product, and yes, the pros will get a discount against the price. So we are looking to launch this next week, and we wanted to get that message out to the community. So if Trading Labs are of interest to you, being a part of Mark, Emily, or Tyler's team, working with them on a weekly basis as they navigate the market, definitely get excited for Trading Labs because they will be released next week.
Absolutely. We are going to start enrollment in Trading Labs starting Monday, June 21st. We'll have much more information on that as we go. The whole concept here, and if you listen to the podcast, you'll get a lot of clarity and information about it. We also talked to these three coaches, who are going to start these labs in this process, Coach Mark, Coach Emily, and Coach Tyler, who you guys all know very, very well. We talked to them about their vision of team and what they are going to be trying to attempt with their specific teams while they start their trading labs. I'm excited for these coaches. I'm excited for the students. I'm excited for our community here at Tackle Trading because I know how much work has gone into the back end here. And I know what kind of value labs do bring to people, Matt. When I was a young coach, I started Trading Labs a long time ago as a part of a vision that you had, is bringing communities together in application as well as education. And I love the concept, and I know people are going to get extreme value out of it. So more information through the week. Enrollment starts on Monday, the 21st. Go ahead, Maddie.
Well, we are a community, of like-minded investors and traders that kind of came together and whatnot. But the simple reality is, even though we are trained in fairly similar technical methodology, we're trained in fairly similar fundamental philosophy. We have our different perspectives to the market. We have our different styles of how we approach the market, from, Mark's, creative cash flow systems to Emily's traditional, directional and cash flow to, Tyler finding those unique opportunities. And so I'm very excited about it because to see their teams grow in their unique fashion is very exciting. And like I said, I'm excited for the coaches and I'm excited for the community.
Yeah. I can't wait to show them the visuals as well. It's exciting stuff. There's some cool stuff happening. I gotta tell you guys.
Christian made him look good.
Yeah, he did. Christian Sisson, one of the most valuable people on our team. He does so much work with
I'm not
design.
sure Mark's looked at anything else besides his own picture on that poster. That's all I'm saying.
Me too.
Oh, Emily said, yeah, me too. I've been looking at it as well. Yeah.
Is it your social dating profile, Mark? I don't even know if you use Tinder.
It should be.
But listen, you guys never listen. I do not use Tinder. I use basically all the rest, but not Tinder.
I see.
That's not going to stop our jokes.
No, I don't think it's going to slow me down at all. No. All right, let's talk markets here.
Yeah.
Kind of hesitating in front of the Fed meeting tomorrow. Obviously, a two-day policy meeting started today. There's some speculation, some interest into what the Fed may or may not say tomorrow. We'll talk about that just in a minute. Technically, though, we're kind of just hesitating up near the high. We've been in a tight range consolidation on the intraday for a while. But Matt, you see that little white bubble right there, 42.58. Again, the S&P did tick to an all-time high here today, intraday on a light range candle. How do you read the price action here? How do you interpret the S&P 500?
Well, the longer this consolidates, hugging that 90 MA, I'm going to start breaking down the technicals from a pip perspective instead of a cent perspective. That's how little volatility we've had in the marketplace over the course of the last, last couple of weeks, 2-3 weeks now. And again, as we were talking about yesterday, there was a question yesterday we were talking about in the halftime report, talked a little bit about it in the podcast, and it was like, we always seem like we're waiting for something, right? When the market is asleep, the analysis becomes, well, what can break this market out of its slumber? And, obviously you look at the economic calendar, you look at the earnings calendar, you look at the geopolitical situations, and you try to identify what are those key moments that could wake the market up, right? And that's why, 2 weeks ago, we're looking at all those labor market numbers. And last week, we're looking at those inflationary numbers. And this week, we're looking at the Fed and we're saying, what is that next event? And so the next event, obviously on tap, that could wake the market out of the slumber of this technical ride that not exactly a ride at Six Flags, more like a ride at Disneyland, right? When you have the 3-year-old and you put her on the little pony and you hold her, that type of ride we're having in the market. Well, the central bank certainly can wake the market up out of the slumber. And so obviously most market participants this week are going to be looking at the Fed, and there's a little bit additional eyes, in my opinion, on the Fed because the market hasn't really been doing anything. And so maybe there's a little bit of talking the book this week by a lot of people. Man, the Fed can do this, the Fed can do that, the Fed can hypothetically do a lot of things. But the reality is we got a major event tomorrow. The anticipation for that is building. There is some traders and market participants out there that do expect something dramatic out of the Fed. But to me, that's more of hope. They hope the Fed talks about the inflationary situation. But when I look at the Fed tomorrow, and yes, it is one of those key events that certainly could spark price response. But when I look at the Fed tomorrow, I'm seeing a situation where I personally don't expect the Fed to do anything with monetary policy, and that is pretty much par for the course with literally everybody on monetary policy. The question on quantitative easing and whether or not the Fed is going to begin talking about the tapering of quantitative easing, that is a hypothetical situation that certainly the Fed could discuss. But if you look at the speeches over the course of the last few weeks leading into the Fed, and Mark, you view those speeches the same way I do, are you seeing anything in their speeches that suggests they're ready to begin tapering?
Of course not.
Or has most of the speeches been pertaining to this is a long road, we got a long way to travel, we're if we lift off too prematurely, it could impact the projections. And so I'm seeing a lot of, hey, we need to be patient type talk. And whenever you see that, it's not like the Fed's going to come out and say, hey, we're going to start tapering in September. And so, yes, I do think market participants, myself included, want the Fed to be more transparent in their language and in when we can expect liftoff from a quantitative easing perspective, and then ultimately from an interest rate perspective. But based on what I'm seeing, I just think the Fed's going to disappoint the people that expect them to start talking about things we want them to talk about when they haven't indicated that. And so I think it's going to be one of those events that come, that pass. We'll see if the Fed can spark the market out of the slumber. But there's been a lot of economic reports, guys. And quite frankly, there's been a lot of geopolitical situations that certainly could have driven this market out of the slumber. And it just hasn't yet.
I'm one of the participants that would love the Fed to come out and give me more clarity and more information about what the heck they're going to do. You bet it. But I am also not one of the people who say this is one of the most important Fed meetings in the last several years. It's going to be chalk. Could create price response? You bet. We've been in a price lull for 2.5 weeks. So of course it can create price response when you've been consolidating this tight and markets are waiting for something to act on.
But even if it does, even if we do see price response, isn't that most likely from the hot takes of their lack of transparency?
Yeah, probably.
Well, here's the question I have for you boys, because it's the only thing I care about. I mean, Fed's going to talk whatever, but it's Expiration Friday. This Friday.
The cash flow.
Do I need to buy back for 5 cents, or just let those suckers expire?
I need the stock on that one.
That's a great question.
I just need to know: do I let them expire, or do I buy them back?
Now, I have an instinct about this, but obviously Mark is a cash flow aficionado here. I want to get his take as well. In my opinion, Emily, if you can avoid risk for a nickel buyback,
you do it.
I do it personally.
Especially last week of expiration, if it's even debatable, you have some gamma risk there too. So 5 cents, you sold it for $1, take the 95.
Sometimes I do.
I don't want to click the button. I'm lazy. I don't want to click the buy button. I just want it to expire. So if you're telling me it's a non-factor day tomorrow,
I don't. It depends. Like, how much exposure do I have? Have I been pushing it too hard? In those situations, I almost always do. But if I'm just doing my normal thing, and especially with naked puts, if I like the company and want to own it, I usually don't. So I mean, there's a lot of variables there.
So you take it on a case-by-case basis, Mark, and you kind of look at the detail.
I'm pretty simple on that. I think with 30 days, if at any point you've captured 50% of the net credit, I think you pull the trade in the first 2 weeks of it. If you captured 75% of that credit up until about 3 weeks in the trade, I think you pull the credit. If at any point you're capturing 90% of it and you still have a risk at expiration, yeah, I think you pull it.
Yeah. And especially on a nickel, you get free commissions on a nickel. Yeah. So, I mean, it's like, come on.
It was like, yeah, but I got to buy new shoes.
She just doesn't want to click the button. She's in the same mindset the market's been. Doji. I got to click buttons. I got to work. No. My cash flow is doing just fine. I get exactly where she's going.
I love the cash flow traders coming in, but can we just stay asleep for a little bit longer?
Yeah. Wait till Friday so I can click the buttons to sell and then buy.
Mark, what about you? While we're talking Fed here for a bit, and we'll talk much more about the Fed tomorrow, actually, when the meeting is going to be, releasing their policy statement and whatnot. Will be noon my time tomorrow, 2 p.m. Eastern. But Marky, any anticipation on this Fed meeting at all? Anything you want to add to the convo?
Well, I mean, as a market participant, I'll be like, and especially because of my role here at Tackle Trading, I'll be reading every word. And I didn't think about it when I went to bed last night. Didn't think about it when I woke up. Probably won't think about it tomorrow morning, like when I wake up. But when noon comes around, it's not.
Your mic went light on me, Marky. I don't know if anybody else is hearing that.
How's it now?
Perfect. Sounds great.
All right. Listen, I was saying nice thing. I was saying I don't care about you, Fed, and I guess they didn't take. The Illuminati powers that be didn't like that. I don't know. I mean, I have this like bearish tone to me lately, sometimes, and a lot of it has to do with the Fed. But like Matt and I were talking yesterday, and we were having the conversation, and we had it a little bit in our pre-production. When Paul Tudor Jones says it's the most important Fed meeting ever, I'm like, I just don't feel that. I don't feel that anticipation. I don't feel that. It's a Fed meeting. And, the Fed is the market in many aspects. And so you're always paying attention to it. But I just don't have any heightened anything compared to other meetings. The market reaction can be, all over the place on a Fed meeting, on a JPAL. We know this, but that's just the normal. I just don't feel like, oh my gosh, what are they going to do?
I'll personally put an end to this conversation by officially labeling this the 97th most important meeting in the last 12 years.
I don't think the markets are expecting a crazy fireworks show here. I mean, the implied volatility is not spiked or anything.
I mean, because here's the thing: the main theme in the market right now, or at least the main storyline that the people are talking about, inflation. What possibly could be said tomorrow that would change people's opinions on that?
Well, and those people's opinions are getting more they're more cemented today on inflation than they were even 2 weeks ago.
Mhm.
I mean,
You've seen two reports in the last, and we're just talking economic reports, not all the other circumstantial evidence regarding inflation and whether or not it is transitory or not. But we've seen two economic reports, the CPI report last week and the PPI report today, that were the highest prints on inflation year over year that we've ever had. Now, these reports only go back to '08, okay? But let me clarify something.
Mhm.
They're the highest they've been since the late 70s, early 80s. And for those of you that are not in a generation that remembers the 1970s, I promise you, you don't want to repeat the stagflation of the 1970s. And so there is some concern from an inflationary perspective. The PPI report just printed in at a 6.2% year over year reading. CPI was north of 5% last month. This data is getting extremely compelling, and the Fed wants to push out their message of transitory, but the economic data is not supporting their language in any capacity. I'm not sure the Fed wants to have this conversation because the Fed knows they're not ready to pull the money from the marketplace. And so I think they're going to try to punt, guys. And if you think they're going to try to punt, I don't think it does anybody justice to be like most important one ever.
No,
It's just simply not.
and like normal. I mean, in fact, we could do the over under how many words are going to change in the policy statement thing.
This time what did I say, 17 last time?
17, yeah.
And it came in like 30. I'll revise north. I'll go 26.5.
That's a good line. I will go under. I'm going under that 26.5 line.
If it's under, then it obviously is the most important Fed meeting of all time.
Yeah.
Yeah.
All right, more on the Fed tomorrow. Actually, we'll talk about that a little bit more. Let's do a little quick technical breakdown.
Oh no! I thought we were talking about the Fed because I didn't have to break down the market from a technical perspective.
Rapid fire style, brother. Like
rapid
old school
fire
coaches show. Yeah, let's see.
Rapid fire is very simple, guys. It's riding the 9. It is asleep riding the 9. There isn't a lot intraday here to kind of look at. You're range bound, you're riding the 9, and the market is in a wait and see mode from a broad market perspective. Again, when you break down some of the sectors, when you break down what's happening underneath the indexes, yeah, you have some action, right? We broke that down when we were talking about sectors yesterday. But when you're looking at it from a technical perspective in the broad market, there's just not a lot to read, guys. We're now going into 3 weeks on riding the 9. It's short range bound consolidation, 20-point ranges.
Mm-hmm. Yeah.
I would love to give a more detailed breakdown technically than that, but there's just nothing there right now.
We might need a new phrase than riding the lightning because it's obviously not what it feels like right now.
The 9 still has to be the lightning.
All right. Riding the lightning. It is what it is. So the S&P obviously just hesitating up here near the high. What do you see? What about the other indexes here, Matty? I mean,
looking at the other indexes, Russell retesting that 2300 zone here today. You saw the test of that zone. Little rounding defensive nature to the Russell 2000, obviously with the market asleep. I do think it's important for 2300 to hold. But with the market asleep, I don't expect the Russell to start waking up against some of the broader baskets of stocks. Looking at the Nasdaq is actually the index that is showing the most giddy up here, right? Mm-hmm. And some of that is due to longer term interest rates coming down and the growth trade coming back. We talked about Paul Tudor Jones yesterday and regarding his commentary on the central bank, and some of that commentary we had today as well. But he also talked about the concept that if the Fed is not going to be aggressive from an inflationary perspective, then to push that growth, right? And so there is some of that commentary going on out there right now that if the Fed's going to stay pat and they're going to run the risk to inflation, well, push growth because that's what they're going to try to attempt. And we have been seeing that technically in the marketplace as we downgraded some of the cyclical areas of the market, like industrials, like finance, like basic materials. We downgraded, some of the consumer areas, and retail sales here today was a little bit concerning as well. and I'll get into that here in a second, but when you're looking at what's happening in the Nasdaq, you are seeing a little bit more participation. You're seeing a little bit more, media talk about that, talk about the potential of growth here, and so the commentary is starting to happen. You're starting to see it from a technical perspective as well. 14,000 guys. I was fully anticipating a fairly significant fight at 14,000.
Mm-hmm.
There wasn't a fight, like at all, like none, like one day,
Cut right through it.
and then just blasted right through that. And so you're starting to see, and again, we did upgrade for the last couple of weeks coming into this, but I was anticipating something a little bit more aggressive at 14, didn't transpire. And so I do think you're now seeing a little bit more price coming into sectors like technology. You're sitting at resistance, you're a little bit overextended, but you gotta like the momentum you're seeing in this short-term trend as you're getting into that resistance level. Obviously, the Nasdaq itself has already achieved that. When you're looking at communications, yesterday, communications clean breakout, little snapback here today, but you got to like the trend and the pattern coming into communications as well. And then you look at discretionary, that's been a tough battle. But again, anything tied to consumers right now is just a little bit more difficult. When you're looking at the discretionary space, a little bit more difficult. When you're looking at the consumer staple space, just a little bit. And again, little is the key word here, just a little bit different and a little bit more difficult. But you got to like what's happening in technology. You got to like what's happening in comms. Those are areas of really strong growth. Once again, growth seems to be coming back a little bit with the mid caps waking up, with the underbelly waking up, with the technology sector waking up a little bit over the last couple of weeks. And so even though the S&P itself is a lullaby lulling a baby to sleep here, you are seeing action start to separate from a sector perspective. And once again, whereas 6 months ago it was from growth into cyclical, from growth into, and especially after the January meme market, it was from aggressive growth technology into staples, defensive areas. Now you're seeing the opposite transpire. You're seeing money coming out of staples. You're seeing money coming out of consumers. You're seeing money coming out of those cyclical areas of the market that were so strong to the market. Once again, industrial, once again, basic materials, and once again, specifically finance. What's waking up? Those areas of the market tied to growth. And so, like I said yesterday, when you look at our rankings of the sectors of tackle trading, you see a lot in that 15 to 25 yard markers, but that doesn't really tell the story, as some of those sectors were in the 5-10 range. They've been getting downgraded over the last couple of weeks. Sectors like technology, communications were net neutrality, 35s and 40s. They're being upgraded. And as you're seeing the first 2 days of the market play out this week, you're seeing that continue is what you're seeing. So money's flowing out of the cyclicals, and some of it is going back into the growth areas. Can that continue? What we've been seeing in the last 2 weeks, and this is the biggest question I have for tomorrow with the Fed, and honestly, it has nothing to do with what the Fed says, but how the market participants react to what the Fed says. Can that rotation that we started seeing a couple weeks ago from the cyclical areas back into the growth areas, can that continue post Fed? And quite frankly, the hot takes on the Fed, because that's what I think it's going to be tomorrow.
Yeah, the hot takes on the Fed is kind of what my expectation is from the markets.
Obviously. And I don't say that critical, guys, because I'm sure I'm going to have hot takes on the Fed tomorrow too.
No,
we kind of have to when they're not transparent with us.
Mm-hmm. Yeah, I'm with you. Marky, anything you want to add to broad stock market analysis here before we move into commodities? Any thoughts you have you like to add to Matt?
I could babble, but it wouldn't be productive.
Nope. Let's move right into the commodity market then. Crude light next, if we can here, Matt. Appreciate all that breakdown, by the way. That was very helpful. Crude just keeps running. If you want to talk about riding the lightning, this one was riding the lightning for quite some time here. We got a lot of green bars right in a row, and even the light little red doji bars were still just light range candlesticks. Matt, you've been calling for potentially 75, 77. There's a bunch of old history there, but it's hard to know where the top is here. We are overextended on the daily basis. We are range up, no question about that, but crude strength is definitely there. Anything in the price action, Matt, that you want to highlight that's grabbing your attention?
No, and again, this is subjective, but it's how you see this 4 days here. Do you see this 4 days with the double bottom here at the 9 EMA? Do you see this as a high base? If you see that as a high base, you can certainly trigger here and you're targeting 75. To me, and again, I look at something like that and I'm like, maybe a little bit of high base, maybe a little bit of continuation, but certainly price appreciation. I'm not sure. I go back and forth on it. Simple reality, this thing feels 75-ish at this point. Whether or not you see that as a high base resetting the trigger there or not, I don't think it changes the analysis. Once it broke 70, the natural path is to 75.
It feels like it's kind of got a magnet towards those price ranges. I'm with you on that. 77 maybe even in play there.
Well, and I don't think the weekly chart is overextended. I do think the daily chart is slightly overextended in the short term.
And on the back of this, you were talking about some of the cyclical areas of the market. Energy is the top performing sector in the market here today, on the backs of this crude strength. A little bounce off of that old testing support.
I'm going to tell you right now, if it wasn't for crude strength, I'd have a little bit of the exact same concern in the energy space that I do in the basic material space, the industrial space, the finance space as well.
Crude's kind of held it
up. The crude strength is really helping energy stocks right now.
Yeah, for sure. Marky, what about you on crude oil? Anything you want to add?
My Queen's Court pick is in the energy space, so I will save my detailed.
You keep moving that mic on me. Are you eating snacks?
I wasn't talking. I mean, normally I'm allowed.
Right.
I was talking soft. I was being, all subtle stuff.
All right, moving through the gold and commodities market continues. We do need to take a peek at copper here today. Quite a good little bit of a breakdown. Gold continues its 3-day slide here today. Matt, obviously we got the 200 period moving average, got weekly time frame analysis on multiple time frames. It's going to give us some context, but it did break the trend line. We talked a little bit about it yesterday. We're down off again here today. What's your read on gold?
We're going to have an interesting and fairly important test of the 1850 level. You're right there where the 200-day moving average is. You saw the tick over here. Yesterday's tick was right there at the 200-day moving average as well. And so you're in a fairly important short-term test on all of these cluster of moving averages that lead into 1850 being a fairly important support level for the gold market. This trend right here that drove up the price from the double bottom 1675 all the way past north of 1900, this trend's over. It's over. Double top, violation of support, you're now neutral is what you are, which means now we're looking at the support test, making sure support holds. Most likely the analysis becomes a little bit more prolonged, but I certainly could see some degree of entry point into the gold market over the course of the next couple of weeks if that 1850 does hold in a double bottom scenario. But like I said, like I said last week, like I said yesterday when you asked about gold, once the trend's violated, you got to shift your analysis. And right now you're shifting your analysis to more neutrality in the short term against a previous bullish uptrend, which means you're always looking at those very, very key points of support. And that very key point of support right now in the gold market is 1850 on the gold chart.
1850 definitely going to be that line in the sand here on the short term, no doubt about it. Does the weekly give you any kind of relief in the way that you're looking at this? Because I always back it out and look at it.
If it didn't, you're not looking at the weekly chart, because the weekly chart will always kind of smooth out that volatility that you see in any daily chart. And right now you got gold just simply in a bullish flag or a bullish retracement type pattern on the weekly chart. And again, some of my favorite moments in time are when the daily chart gets a little out of whack, gets a little choppy, gets a little volatile, creates a short-term negative movement in any market, whether that's the stock market, the gold market, or the currency market, creates a short-term downtrend against the backdrop of an intermediate uptrend. Those charts become really good bullish retracements on the weekly chart. And so, no, I don't have concern long term, Tim, not at all on gold. Fundamentally, I mean, no, not in any capacity. I haven't talked about the fundamentals of gold ownership in quite some time, but I'm not going to do it today either. But yeah, that's intact, and the weekly chart's intact as well.
Yeah, no, I'm with you. I'm with you. While we're talking metals, though, I do got to get Mark's take on copper and your technical read on copper as well. Marky, obviously copper, he's got that weekly pullback. We're starting on that chart, big red candle on the weekly, but the daily is even messier. Broke the 50-period moving average, broke some kind of wedging pattern that it had, broke support, big fat red candle on high volume in probably the weakest technical read I've seen in copper for quite some time here.
No, it is. Let's call it what it is. It is the weakest chart. It's the first big pullback we're looking at in copper in over a year, right? I mean, there's been little consolidations, there's been little pullbacks. This is the biggest pullback we've had in copper in over a year.
Mm-hmm.
Well, and it does remind me a little bit of here, back here, right? But for the most part, that 50-day moving average has been a real good buy the dip type candidate for copper. You had an interesting potential test here that did look fairly interesting, given the fact that horizontal support had definitely formed right there about the 443 level. You had a very consistent decreasing trend line of resistance putting pressure on that violation. That creates a little bit of a triangle type feel, which can have an explosive breakout one way or the other. Obviously, we're looking at copper as it violates that support level. And yeah, I do think that is significant. And you would be looking at, okay, where could this go once that violation is done? You look at this on the weekly chart. Man, it looked good. It doesn't look good at all right now, guys. I think you're looking at a little bit further depreciation, maybe into the previous old resistance. Maybe they find something on that 20 weekly, but you're looking at 420 at this point.
Yeah, I think that.
I wouldn't be surprised if we even come down to that old range of copper.
Yeah,
and mess around for that. I mean, that's what I think is going to happen. I think you're going to come to the old range, and I think you're going to have this really, really broad consolidation pattern, which isn't uncommon in commodities. It's not uncommon in commodities to create those broad consolidations. I mean, look at gold, look at silver. I mean, you can create long consolidation. I think that's where copper's headed right now.
Yeah. Yeah. All right. That's fair. And obviously we're seeing some that selling in those commodities that were so red hot. Lumber had its biggest 1 week drop in a long time. They've had a parabolic explosive uptrend. So I get it. They are coming back down though. And that copper chart is definitely weakening. All right. Quick peek at the dollar, then Bitcoin, or Bitcoin first is fine. Bitcoin first is fine. Little doji near 40K. Kind of feels like we're going to have a little bit of a technical test here, Matt, as we bounced from the 30,000 mark. There was support down there that was presumed, then actually did confirm as short-term support. We've got the 200-period moving average in play, but I still have this as a range until there's much more clarity. It's a stay away from me still, but there's some interest here. I'm starting to see people get a little bit more interested in the little bit of a bounce that's happening. What's your read on the chart?
Boxes get drawn in potential reversal type scenarios, right? It's got a potential W type formation here, potential breakout of that 41K. You're seeing momentum. It's reclaimed all the moving averages. It's reclaiming the intraday support levels, resistance levels, which means they now act as new support levels. And you're seeing that tight range consolidation between 40 and 41 here today, showing you a little bit of can we test that and break here? And so you're in a scenario where you certainly could see a nice little breakout with some price appreciation, and most likely back up into these historical ranges here. But no, I don't have it as again, long-term versus short-term. It's tradable above 41K in my opinion.
Yeah. I think there might be a trade there from a longer
keywords trade.
Yeah, there might be a trade there. I agree with that.
It's K trade scenario.
Keep an eye on that box.
K trade scenario.
Keep an eye on that box. All right, guys, last one, the dollar. There were some economic reports, significant ones that did come out here today, Matt. Monthly May retail sales obviously dropped more than expected. Producer prices came in much higher than expected. In fact, they've only been keeping data on this exact index since 2008, and it was the highest in their history. Anyway, what's your read on this economic data?
Well, the PPI report obviously is concerning given the fact that that report is always passed into the CPI report. So you can expect some fairly significant readings on inflationary pressures over the course of the next few months. And so that the PPI data is concerning how it impacts the Fed. I don't know if it impacts the Fed at all right now, given the fact that they're really, really diving into that transitory type inflationary opinion or philosophy. And so I'm not sure any type of inflationary data is going to get the Fed off what they believe right now. The retail sales data that came out today was negative print. I believe it came in at a negative 1.3% against the expectation that it was, I believe, 0.6%. And so it came in at a negative. And the commentary out there has been basically you're seeing a contraction of retail sales because consumers are not buying as many cyclical things and they're rotating back into services. And I understand why people would write that, and I understand why people would believe that, but that to me is not what is happening in any capacity. What I feel is people simply are seeing a higher price tag and they're contracting their spending habits.
Interesting.
That's what I think. But again, that doesn't go into the messaging that certain entities are trying to put out there. But again, if you're going to see a higher price tag, guys, what are consumers going to do?
They're going to balk.
They're going to contract a little bit. That's what I feel is happening out there. Yes, do you have some circumstantial evidence regarding money going from cyclical into services? I don't know, quite frankly. You're seeing markets move that way in terms of sectors, but that very rarely has anything to do with actual economic data in the moment. So for me, I feel like what is happening from a retail sales, inflation is much higher than anybody anticipated at this stage in the recovery. And we can debate the why of that inflation here at any time anybody wants. But the reality is CPI report coming in month over month, year over year over 5%. PPI report coming in year over year above 6%. That's going to have an impact on consumers and their purchasing decisions. To me, that's a little bit what is happening here, far more than, oh, wow, we're not buying Apple phones and we're going on a vacation instead. I just think that's lazy analysis, quite frankly.
It's a little teeter-totter thought then. As prices go up, consumption is going to come down a little bit. And obviously retail sales were off for the month of May, and the PPI had a really, really strong reading.
It's kind of how supply and demand has worked for centuries.
Yeah, that's right. All right. And the dollar from a chart perspective just kind of stuck down here in the same little mess it's at.
Gross.
Yeah, sitting on support. All right. Let's move into stock talk next here. And we've got another round of Queen's Court we're going to play a little bit later. We're going to see how the Queen is feeling here today, whether she's in the mood for choppy, or just some good old-fashioned investment and stock ideas. Hopefully we can get past the Queen's Court here today. We'll play that here in just a few minutes like we always do on Tuesdays. A couple of stock news stories here, Matt. Let's start with JP Morgan if we can, kind of on the backs of the conversation we've had around the Fed. JP Diamond did come out recently over the last 24 hours and announced that they are stockpiling cash. And the essence of this one is what he's saying is we are putting $500 billion into our stockpile because when interest rates go up, we want to unleash it and make more money from higher interest rates on lending and all those things that JP Morgan Chase does. One of the biggest banks in the marketplace by assets. Matt, what's your read on this story? Do you think Jamie Dimon is onto something here in terms of stockpiling his cash?
My first thought was, and he wonders why fintech is kicking his ass right now. You've had 500 billion and you're just sitting on cash in the biggest inflationary situation we've had since the 1970s and 80s.
Right.
What are we doing, JP? Like Diamond, what are we doing? Like, where's the plan? All of a sudden now it's like, oh, inflation's here. No, I don't know. I took the story as a slight negative, quite frankly. And it made me wonder, what have you been doing?
Well, they still trade on profit. I'll tell you that. He did also announce the same thing. $6 billion in trading profits. Dude, they're going to find ways to make money at JP Morgan. We know that. They're one of the best banks in the marketplace. Whether his strategy is sound or not, that's a different discussion. I'm not certain one way or the other. I thought it was an interesting note that, here the Fed is saying everything's transitory, and you've got one of the biggest CEOs in the world at one of the biggest banks in the world saying, well, I don't think it's transitory. I think it's going to be lasting, and we're going to bet on that.
Because it's not transitory. We all know it's not transitory. I hope the Fed understands that we all know it's not transitory. Like nobody, like who really is believing that it's just transitory?
I don't think
you increase the balance sheet by 120% in less than a year. In less than a year, you're pumping 120 billion in QE. Oh, and by the way, JP gets some of that. So why don't we taper some of that 120 billion JP's getting if they have 500 billion in cash reserves ready to rock and roll, loaning it at a higher interest rate to consumers?
That's another thing.
Do we really read this as a positive story for JP Morgan?
If the markets needed one more lesson in the history of finance as to why when struggling banks are putting their hands out that they don't need it, record profits from these banks in the last 6 quarters has been incredible. JP Morgan and JP Morgan Chase did not need that money from the QE fund last year. They did not need it.
No.
So say la vie. It is what it is. All right. And then another one here, Boeing, actually, they've had a lot of tariffs. And we don't talk Boeing as often as maybe we used to for obvious reasons. We don't like the company that much. But Boeing here, they did get some resolution between a tariff conflict that's been going on for 17 years between the EU and the US. And they did announce today through the World Trade Organization that those two groups, the US and the EU, were pulling back those tariffs, Matt, putting a 5-year pause on them as they negotiate further.
And those tariffs have been hot and heavy debated and negotiated over the last 3-4 years as well. If you guys remember, we were putting tariffs. Europe was, retaliating with more tariffs. And so getting some degree of completion and conclusion to that tariff storyline is a positive moment for Boeing, for the air travel companies.
I agree as well. I thought it was a positive note for those.
That's the nicest thing I could say about Boeing.
That's all we're going to say then. All right, let's move lastly into our Queen's Court, unless you guys got any other corporate items. Actually, no, there was one, Mark, you brought up. I want to talk about DraftKings. I can't just avoid one of my favorites because it got smacked on the head here today.
Is that your Queen's Court pick today?
No, it is not. It is not. You might want me to make it that now. Dude, I'll go full defense here. It is what it is.
I was wondering how you would respond to that. Yes, it is right now.
Now it is.
I was challenged.
We're starting Queen's Court right now. No, Hindenburg Research, the famous short seller in the marketplace. They actually came out with some research last year around Nikola. They were in the spotlight there, I believe, in August and September when they highlighted some of the problems Nikola was having. But Hindenburg did release a public statement that they are short DraftKings. They are betting against the company. DraftKings didn't respond to any of the short kind of information or research. I don't know what their logic behind it was, Mark. I haven't read too much into it. I just saw the headline. What do you know about this one, Marky?
Well, they're claiming that the company has ties to black market operations through some of their betting apps and so forth. And so, it's not necessarily a fundamental argument. And Hindenburg does this all the time. A lot of you may not be familiar with Hindenburg. They'll go in, they'll research, and some of their research is better than others. Some of it sometimes I read a Hindenburg, I'm like, that's a sloppy hit job. And sometimes I'll read a Hindenburg short report and I'll be like, that's interesting. Still diving into the nuts and bolts of this one. But their basic allegation is that DraftKings, some of their betting apps are tied to black market operations, maybe not through them directly, but that's how they're used, right? Like how many times have you heard that argument on Bitcoin? I'm trying to dive into it to see if they're accusing specifically DraftKings or if it's just the Bitcoin argument, right? That, hey, Bitcoin's used in illegal transactions. So that's what's going on right now with DraftKings.
So they're speculating about something that,
dude, Hindenburg, once again, sometimes Hindenburg does great research, and sometimes I'm like,
I'm good.
Really?
It did blow up my chart though, and DraftKings did hesitate at high over the last few days, but it's a messy chart. There's nothing there. There's no trade here. And obviously if there's conflicting, points of view right now is probably just to stay away until that volatility subsides and people get more clarity on the pattern. That's all I've got from the news here today. Let's move right into our last segment, and we have a lot of fun with this one. Queen Emily, I'll set it up a little bit, then I'm going to turn it over to you. The Queen's Court, each and every week on Tuesdays, the coaches who are on the halftime report find one stock idea, either as a trade or an investment. It can be either of those two things, and they submit it to the Queen's Court. And Coach Emily, the Queen of Tackle Trading here, the Queen of the Dynasty Investors as well, she gets to kind of judge those and see if they are to her liking or not. If they're not, we get our heads chopped off and lopped down the hallway. And if they are, we get to survive another week. Emily, you're up. Where do you want to start here today?
Well, today I'm going to do things a little bit different. I am not going to, I'll wait until the end to let you know who's going to get their head chopped off or who's going to survive. So as you guys present, I will just listen, and then I will let you guys know at the end of it who's surviving or who's not. I might just do it, triple head chop off today. I don't know how I feel today. We'll see. I might just line you guys all up and just chop you off.
I do
it's
remember
a boring week in the market. I have nothing else to do.
She needs some
I don't like any of our chances.
Like what's going on here?
I'm switching my pick.
Like, Doji, here's your Doji.
I'm going. I kind of feel I'm going to get butchered anyways, and so I'm taking a shot in the dark.
And I'll tell you the reason why I'm going that route today. I'll see what you guys present first, and I'll tell you why I went that route today. But let's start with the guy who got his head chopped off last week. So Matt, you're up first.
Matthew Todd.
Oh, this is unfair. Okay, I was going to do Apple, and I was going to go safe. Apple's looking fantastic. Nice little double bottom on the 200, double top, reclaiming all those moving averages. We talked last week about the K-trade scenario. We talked last week in Jedi options last week. We talked about how you could take advantage of the volatility increase in these moments in time. And if you do see the breakout, man, that straddle, that strangle's perfect. It's beautiful. You got the breakout, which means, guess what? Now you're looking at this from a directional perspective. I really like what's happening on Apple right now. And if we do start to see growth come back into the market and that becomes the flavor of the month, Apple's going to be a beneficiary there as well. And so Apple was going to be my pick, but the Queen, in her tone, it feels like somebody's dying. And so I felt like, okay, Apple's too safe here for a boring week in the market.
I got to tell you,
let's try something sexy.
I'm okay if you fall on your sword.
I am.
You can sacrifice yourself for the greater good.
I am. And now I'm going to, because you challenged me and I have to fall. So who can find me the biggest sword to fall on? That's what I'm going to do. The biggest sword I could find is Airbnb. Now, Airbnb has been fairly negative in recent price action. You're seeing a stock that double top, double bottom. You see the double top here at 217 by 220. You see the double bottom right there at 170. You got the IPO pricing here right in the 130, 140 area. Obviously, the negative print post IPO put that support level as well, about 120. Now, you see this big momentum to the downside, right? Mm-hmm. Big momentum to the downside following the violation of support. Typically, after a reversal, you will see this type of increasing momentum. Where does that momentum stop, though? That momentum stops here on Airbnb, a very popular brand company, by the way. This momentum stops right into these same zones of support following the IPO. That is telling to me from a technical perspective, when a stock comes into an IPO price, or even if the negative reaction is over time like it was on Facebook 10 years ago, typically that pain and that hate gets a little bit too strong in the short term. Where it finds support, very important. It finds support in that same type of zone. Now, the reason I switched is not simply because it found support around the zone of the IPO price, although I do think that is important, that the momentum shifted in that capacity. The reason I like it here, and I like it from a trading perspective, but the reason I like it here is technically you have a couple moments here that are fairly telling to me. And when I say that telling, it's like, Mark, when you're sitting at a poker table back in the day, right? And you're sitting there for 8 straight hours and you're playing against the same people for that time period. What do you start picking up, Mark?
You start picking up tells.
Okay, and these tells are indications of what you should do as well, right?
Correct.
And so what I'm seeing here, a couple tells, number one is this candle here, right? You see the decreasing volatility here, the slowing momentum following a positive response to an earnings report. Then about a week later, you see a big increase in price action with a fairly significant increase in volume as well. It then fought up against the moving averages and didn't really put up a fight, establishing a higher level of resistance above 150, reclaiming all the moving averages. Now you get this wicked random consolidation where it's fairly volatile, but again, tells are important to me, Mark, in these types of reversals. Snap back here, one test of the 20, increasing volume, ran above it. Now, the market is asleep. Airbnb is not asleep. What we've also been seeing to add to the evidence is what has the underbelly, Chucky. You love the underbelly. You've lived in the underbelly. What's the underbelly been doing in recent history?
It has, for the underbelly, it's stabilized.
It's stabilized, which is important though, because what had it been doing?
Getting crushed.
It'd been getting crushed.
Had a rough month.
And you're starting to see that come back a little bit as well. And so you're in that zone where we're talking about a little bit of rotation from the cyclical safe areas of the market back into a little bit of the aggressive. We're seeing the Russell 2000 reclaim the 2300 zone and now play defense at 2300. We're seeing the growth areas of the market, the Nasdaq and communications, seeing upgrades at tackle trading in those areas of the market where we're downgrading some of the consumer driven areas of the market and some of the cyclical areas of the market. And then technically you have a fairly, I don't love V-shaped type technical reversals, but you do have a V-shaped type technical reversal here where you did not even establish a double bottom. It actually increased its support level from 130 to 140 in that. And then first test against resistance, it violates and breaks out. I like Airbnb from a trade. I got it in price appreciation mode, and the technical target would most likely, you got to navigate the 50. No doubt about that. T1, navigate the 50. Outside of that, you're looking at 168 by 170. Queen, Airbnb, that is my pick today.
Great analysis. I love it. I will save my response for the
I
end.
am going to go cower in the corner while you two present.
Go. All right, let's have Tim go next.
I'm not letting Matt fall on his sword and play this righteousness to himself and not also fall on my sword right along with him. So I am going along the same line of thinking. And this was not actually something just last second. I actually had this one planned. Pinterest, give me pins. And actually, let's start with the communications sector in general, XLC. And, we talk about these different areas of the market, where the strength is right now, top-down analysis style. Communications is one of them. Obviously, energy is very, very strong. I think the pick from Mark's going to be coming from energy. He did hint at that a little bit earlier. But communications also very, very strong. The participation here was Facebook and Google. Facebook and Google all the way at the top of their charts, breaking out, showing a lot of strength. They've been on people's radars. They've been on the option report. I'm not going to bring those guys up. Anybody who's been around me long enough knows I love Pinterest. I love the company. I've had the conversation with Matt many, many, many times. It's a component, obviously, in communication services, and they're just a profit-making type of company, Emily. The demographic of people who go to Pinterest, they use that advertising more. They actually do purchase more. They've been releasing data for years about the way that they can monetize their users. I'm a big fan of the platform. I'm a big fan of the company. I'm a big fan of the way that they are generating revenue, and I believe believe in their future. So I believe in them fundamentally. I really, really do. Valuations, of course, stretched. PE ratio, even negative. This is never going to be a mark company, not ever going to happen. But for me, I'm a growth guy. I'm a believer in ideals. I'm a believer in forward thinking. And I think Pinterest is going to find that narrative at some point and become a very profitable company. And here's why. Sales metrics have gone up year over year over year over year over year since this company has released data from 2016 all the way through 2021. In fact, sales growth from 19 to 20 was almost 60% year over year. They actually had a really good start to 2021 as well. Now the chart. Deep correction all the way below the 200 period moving average. It was getting ugly. And you want to talk defense, it rebounded right back off of that, rallied right back up through the 200, put in a higher pivot low. And that significance right there picked my attention, no question about it. It played battle, it played defense, found the 200, and then went right back up through resistance and is now taking another leg up. I like it above 70 here for something. I don't have this as a short-term trade concept though, Emily. I love it for cover calls. 2.5% cover call on a volatility company that has taken it right on the chin. It took the punch from the marketplace. It battled back. It played defense, improving technical analysis. 32 delta, and I can still pick up 2.5% on the 30-day option. It's a great covered call stock. Liquidity's there. Enough volatility's there, but it's not some crazy gapper on a day-by-day basis in that regard. Pinterest from Communication Services is my pick.
Can I just add one thing?
Mm-hmm.
It's your pick. I don't want to get you killed.
We're falling on our
Do
sword.
you trust me?
I do, yes.
Okay. I really like in the cover call scenario here. I do like it because you're a little bit overextended in this reversal potential, and 75, which is where that 32 delta is the 75 contract. That's a perfect level to sell at right now. Like you can't get better because it makes it easy. If it goes above 75, you just buy back the option because there's nothing until 89.90, right?
Mm-hmm.
75 holds like it did many times. You just let it expire worthless. And so I was adding to your thunder there, buddy.
We'll see.
This is so fun watching you guys sweat it out. I should do this every week.
Absolutely.
Now, if you were going to say directional, I thought you would get killed.
No, not a short-term directional play. Nope.
All right, Mark, you're up next.
All right, not going to go as long as I normally do because the basis of my thing is energy. I've shared my thoughts with you, Emily, numerous times on why I like oil in 2021, shared them with the community even more. So that's the underlying basis of all that. Give me BP. Now, in this broad space of energy, I got a lot of choices. And break out and give me a 2-year weekly chart if you would. The line drawn is just perfect. I got a lot of choices, right? Now, I've done very well in the last year playing the epicenter stocks, stocks that got hit the hardest, that even their survivability was in question, right? Airlines, hotels, cruise ships, oil, energy companies, and so forth. Now, in all of this run, I've done 2 simple things on this run that's been very good to me. One, I've measured how far do you got to go to the March lows. Like I played MGM a lot, right? Once MGM got going and past a point of like no brainer for me, and started exceeding those the lows where they had the highs. So where we started at the pandemic, surpass it. I don't have a lot of interest. I want to find bargains. I want to find stuff I can cash flow for a long period of time. And I got called out on a lot of this stuff, but I wasn't very unhappy about that. Well, BP still got some room to run. In fact, BP still has about 25% of its current value to run before you reach where you were pre-pandemic. A lot of other energy companies can't say that. And it's not a question of fundamentals. It's not a question of this and that. BP is a good company that's been doing a lot of the cost cutting, showed profitability. They had to cut their dividend like a lot of energy companies do. But BP has a rich history of dividend payments. Covered calls and so forth aren't too bad either. So it fits the general criteria. All right, so we got a space I like. Energy, I like the thesis still. Obviously, the oil chart is beautiful. It is just screaming that energy companies are going to follow. And I still got some room to run on BP. So check one box on a macro level, check two box on, I still think it has some room to run. And then I look for specific triggers. Now you don't see it on this chart right here because very few people use it, but on the weekly chart, the 100 weekly moving average, one I use in these type of weekly, monthly analysis, it came up 2 weeks ago, hesitated like a first test of a moving average normally does. Came up last week, hesitated again. Like, once again, statistically, when you look back at these tests of these major moving averages, especially when they haven't been tested in forever, you're going to see those bounces. You're going to see those bounces. So it hesitated. You got a horizontal breakout. You got a double band of breakout today. So we got the macro picture, oil. We got the price appreciation storyline. Clear air is what I like to call it too, up to those pre-pandemic price levels.
Mhm.
And then we get the third trifecta. We get a nice technical signal. Checks the boxes. And I think the timing of BP, the price move of BP is really, really nice. I think you're getting a strong trading signal, but I also think you're getting a nice position entry signal, perhaps even an investment entry signal. It's a pretty signal. It's a pretty chart. It's a pretty macro environment. I present BP.
All right, so let me summarize very quickly. So we got the position analysis on BP.
Mm-hmm.
You got the covered call analysis on Pinterest with the selling of the 75 option. And you have the swing / position on Airbnb is what you have.
Mm-hmm.
Okay. Emily, who survives till next week and
Wow.
who has the shame of getting annihilated, not just publicly, but quite frankly, over the next 6 hours?
You guys have completely ruined my day because
That's right.
the Queen has informants, and yesterday on the halftime report, Coach Gino was on and he brought up, Apple and Activision and TSM, and all you guys were jumping on all of those things. That's going to be my Queen's court. So I was really waiting for you guys to bring any of those three up. And Matt, you were close. You would have brought that up. And I was going to line you guys up and just chop you off just for the mere fact of being lazy and not doing any analysis and finding your own stuff.
We knew what would happen.
So good job on not bringing up Coach Gino's picks from yesterday in Apple, Activision, and TSM, although they all, they have been really good picks. Anyway, Airbnb, let's go back to the charts and look at them individually. I love your analysis on Airbnb. The fact that it's in the underbelly and that's starting to pick up. If you look at the Russell, you can see that, starting to pick up. I like where it's sitting, kind of, broken, created that cup and handle and broke above that. It's, created that new resistance level today with that green candle. You do have to get past that 50-day moving average that is there, but I like it because I don't have any underbellies in my portfolio right now, and I might start looking into adding some. So Airbnb might be one of those. Because I plan on going on vacation too and getting an Airbnb rental. So why
I'm going
not?
on vacation right now.
He heard what he needed.
For that reason,
I heard I don't have an underbelly and I'm interested. I knew I was like, I'm gesture's good.
I am interested. So yeah, for that reason, I like Airbnb, and Mr. Matthew Justice, you will survive this week's.
Thank you, Queen. You are the best.
Apple, you would have literally gotten your head.
I knew what would happen.
He played it smart. Yep.
He played it smart. Pinterest.
He used strategery.
Oh, goodness gracious. Again, great analysis. I love that cup and handle. Obviously, it's one of the things that I just instantly saw, right? Like, when you're so used to looking at charts and there are those, patterns and trends that you just see them and you're just like, oh, I see it. And I could just see that cup and handle forming. I love where it's at. It just cleared the 50. It's above all the moving averages right now. We're seeing, that increasing momentum. Volume's not exactly where I want it to be, but it's starting to inch up there. I really don't play Pinterest much, but once we looked at that cover call strategy, 2% ROI right now is really not bad. And we had this question yesterday in the podcast about what do you do when there isn't any, when there isn't any volatility in the market? Well, here's one you can play. You're still going to get a good ROI, right, on Pinterest, and you've got enough room to be able to pick up some cash flow and not have to worry about rolling that call up if it does get up to 75. So for that, I absolutely love. And yeah, I have nothing bad to say about this at all. I love how it kind of bounced back off of that, that downtrend after earnings. It's been fighting when the market's just been sitting there doing absolutely nothing. Pinterest has just been inching up and inching up. So I love it for a cover call play. I like it. So for that, you, sir, survive.
Thank you, my queen.
Now, I really was planning on getting some blood in the streets today, and the energy sector. I love the energy sector so much, so I will leave it to Team Tackle. If you guys want to see blood, you tell me. I will. This is, and I'm only saying this.
Tackle wants blood. Tackle always wants blood. Are you talking?
Because this is the reason why Matt got killed last week, because he brought an energy play, which I already have enough of.
Great point. So, we've been bringing energy every week.
We've been bringing energy every week, and Matt had his head chopped off because of energy, and not that there was anything wrong with his picks.
I gotta tell you,
they were all wonderful picks. But BP I love, and the reason why I'm contemplating not chopping Mark's head off today is because of that 100-day moving average we added on the weekly. That's one that I never usually look at, but looking at where it's sitting at, I was like, okay, I see that.
I
could add BP. Maybe I could add BP, even though I have energy plays. Maybe I could add BP. So this is tough. You guys ruined it.
You don't have to kill anybody.
But I do. The people demand of
it.
If they don't
I agree.
see
The people demand you got to kill one because you're not taking three. So out of the three, you got the BP energy reversal analysis.
I can't. I mean, I can keep all three of you, but I just seriously, I still want some blood. And I really love the BP one. I really do. But I have to chop some heads off. And Team Tackle wants blood. So Mark.
Well, when my pick makes money, if I'm going to die, I'm going to talk crap.
Right. Oh, you know what? You know what? I take it back.
In the last year,
I take all of that stuff back, because you did talk some trash yesterday on the podcast, talking about how you're going to beat all of us at trade. So you know what? No more sympathy.
That's a good chart, and that's a good pick.
Like we say in Among Us, you're dead, bro. You can't talk.
Can't hear you. You're muted.
Your head's lopped off. I will graciously just exit side left and be happy that I made it out for another week.
Really great picks. It's not you, Mark. I already have.
It's not you.
It's not you. It's me.
George Costanza.
It's me and Team Tackle. We just wanted to see some blood.
Oh well, Tackle got what it wants. Good analysis and a head chopped off. They got their blood. So fantastic.
And a very fun show here on a Tuesday, guys. We're going to be looking forward to tomorrow's FOMC policy statement. Let's start wrapping up the show here today. As always, Queen, it's just a lot of fun. Appreciate your enjoyment of that and also your engagement there. Marky, sorry that you got your head chopped off. I'm going to call it like it is. She's holding a grudge from yesterday's podcast. There was a couple of absolutely. There was a couple things in there where you took a jab or two, and she's like, "No, I'm chopping Mark's head off."
This is a new rule. If you get your head chopped off, you can't talk the rest of the time.
Mark's final thought is dead.
I'm dead.
So, fair enough. Emily, final thoughts from you. What do you want to say to our team out there?
Final thoughts. I probably have to go close out some position trades, because there's a meeting tomorrow, and it's expiration Friday. So, manage your accounts appropriately, guys. Whether or not there's a, movement in the markets tomorrow based on what the Fed says or doesn't say or does or doesn't do, make sure you spend some time to look at your account and make some trade management.
Yep. Maddie, Final thoughts from you.
Final thoughts. Yeah, again, one of those key events that could wake the market out of the slumber is happening tomorrow with the central bank, but we will be with you guys before that announcement is made. So be with us here tomorrow as we break down the price action heading into the central bank. And just depending on how long-winded we go, we might still be with you during the announcement of the central bank. So definitely come back with us in the halftime report with Tackle Trading tomorrow. For those of you new to Tackle Trading, thank you for finding us. Thank you for subscribing to our channel. You guys are the best. We hope you enjoy the analysis we bring on a daily basis, navigating the markets. And if you need anything, you can obviously hit us up at Tackle Trading at team@tackletrading.com as well. And we're very excited to announce the latest addition in our product line, that is Trading Labs. And tomorrow, very quickly at the first of the show, I'm going to show you guys some of the creative art for the team Emily and team Mark and team Tyler, and show you guys why they're so excited. Why the only picture they have stared at in the last 2 weeks is a picture of themselves.
Of ourselves.
Literally is that good. So I'm going to show you guys a little show and tell tomorrow very quickly at the beginning of the show as well. Outside of that, stay fresh out there. Tackle Train. Love you guys. We'll see you tomorrow.
Yep. Check out that podcast.
Programming note, Coach's show tonight. Tyler, Craig, Gino Poor going to be on. I'm going to be talking about what they've been doing in their trading lately.
Nice.
Fantastic.
Coach's
Looking
show
forward to
tonight.
it. 8:30 Eastern. You can find any event we have for our pro members on the events page over at tackletrading.com.